yesterday we didn't have news, and I hit a 10-hour day, so, or a 10-hour play. So we'll just, it's our job just to come up, step to the plate, and see what happens. So stream's up and running, so people can go through and view that if they wish to later. From a top-down analysis perspective, my toolkit toolkit's not in there. There it is. Just every day. So, oh boy, that kid. So it looks like we're going down, right? Obviously. I would say we're probably targeting. So we're in a 4-hour block right now, coming up to a 4-hour fair value gap at the 200s. I think from a macro perspective, we're probably heading down to sub 20,000. I think that's probably the spot that we'd go and sweep liquidity before deciding which way to go. Could even be further down. 200s, 300s. But we'll see. A little early to be calling fundamental trend changes, but yeah, from a macro perspective, I'm thinking something. Let me zoom in on this box here. Clean this chart up. Where's my Z? There it is. So I'm looking at something like this. And maybe even coming down to this fair value gap. And making that one the one to reject down at the 200s, 19,200. I think that's probably the play for Q4, or at least heading up to November. Because this is the daily chart, right? So we can probably get down here early November and then have our Santa rally at the end of the year. But this is looking pretty close to, I don't know. It looks kind of like a head and shoulders, or inverse head and shoulders rather, but it's kind of messy. But certainly today, looking to the downside. Yesterday, pretty red candle, weekly red candle, monthly now red candle. Monthly open was monthly opens 234.25. October open. So mark that on your charts. That's going to be a very, very important level to have over it. So mark it in something like purple or pink or whatever you want to. Something that's not green or red, because if it's over this open, then it is a green month. If it is under, then it is red. And that's very important for full time frame continuity. So then we drop down to the 4-hour. Already did that. The 1 hour. That's just my line. So still getting pretty bloody here. I'd want to see something under 197.25 close. Coming from this level here. That text. Close under for bears. And then we've just got fair value gap here. Drop down to 15, same thing. And that's in Q. Throw my indicators back on there. I do like these levels. It's just they're too. I want the text on the right side. I think I can probably change that. Can I not? Well, so far we are not going down further. So hop on over to ES. ES, I would hope, is a very similar story. ES is green on the month. Week is barely green. Day's about to be 2-on-2 down. But same thing, 4-hour and hourly. So if this is too much for you to really look at, all these boxes are just fair value gaps on different time frames. So 1 hour, 4-hour, and 15-minute. But if you really don't want to look at any of it, I can do the same thing just with zero chart and say, okay, I'm on the hourly chart. Here's an hourly fair value gap. Keep going left, keep going left. Here's another one. You know, you can do that all you want. Fair value gaps are very important because they show you where liquidity could be resting, where you're not going to get that same story with EMAs or whatever. And then this is just a good friend of mine, Paper Gains. He has a Bollinger Band system, which is a standard deviation. 2 standard deviation Bollinger Band just shows volatility. So when it's in one of the other bands, so like if it's in this lower red band, time to sell. When it's in the upper band, time to buy. When it's in neither, it's time to sell premium for options. But I digress. So back to this one. Not really getting anything too intriguing. Gold hasn't been super interesting to me for several days. Oil, I'm still not interested till it's in the 72 level. Same thing that happened yesterday. Well, I suppose yesterday was a little higher, but... Oh, wait, yesterday was Tuesday, right? I think. Yeah, today's Wednesday. So yeah, same thing. I'm still looking for it to go to the 72 level before I'm interested in oil. I would be interested short though. So short oil, short ES, short NQ, probably short gold. But gold's not really super interesting. I'm actually probably more interested to short ES today than NQ just because of how wild NQ can be. I'm not sure where NQ is going to reject, and looks like ES is moving somewhat more logically right now. Excuse me. All right, now is when we have done all the prep we can do. We're ready for the day. The only thing to do now is wait and execute when we see something worth executing on. I do see Apple. All right, we've got the 10 o'clock candle. Time to watch for potential reversal. And Q is saying no thanks. Oops. I remember why that line was there. When I do sense a lull, we'll go over debit and credit spreads for options. Just kind of down and dirty what they are, how they work. And most importantly, I guess, how to use them. Looks like ES is bouncing up. Probably not getting the push we needed. Yeah, this is retracing. Thinking about grabbing Dell short. Oh, now my mic circle is working weird. Think about grabbing Dell short. I don't think I'm going to go long on NQ. I think there's at any point in this fair value gap it could reject, especially with ES going into an order block. I think the only spot I'd look to go to enter into a trade on NQ would be shorting it at the 300 level. Just looking for opportunities to short, not looking to get long. Current market structure, there is no reason for anybody to really be looking long right now if you care about higher time frame continuity. If you're over here scalping every micro pullback and whatnot, first of all, hopefully you're profitable, but number two, you probably take more losses than I'd like to, just because you're counter trend. So this 5 minute ends in 1 minute. I'm not looking for any longs. Really just looking for opportunities to get short. Bill, I was having issues with my mic, but I think it's working now. Double check on your end. ES back into that pre-market high. Struggling in the if it gets above, I'll mark it out. If it gets above 58.73 with a close on the hourly, then we can start looking to get higher, up to 5,900 really. But as long as we're under this fair value gap and under this order block, then we're not looking higher. At least I'm not. All right, back here to the 300s. This is where I said I'd be looking to get short if it can get up here, but going to be waiting for at least 1 minute for this 15 to close, and then maybe get a 5-minute trigger. It'd be a risky trade just because the 15 will be inside, but we'll see. We'll see what the market shows. All right, if this goes 2 up, I'll step away for just a couple minutes, try to settle the baby down. And then when I get back, we'll cover debit credit spreads. This is looking like a day that I might be on the sidelines for. I'm watching, but I'm not getting long here, especially not when we're making lower lows and lower highs. This is just a lower high. Could be bouncing off VWAP. Could reject this fair value gap and then go short. Both of those I'd be looking at. Fail 2 up on the 5 on ES. Good thing I didn't take that short on ES. I was looking at it. All right, inside on NQ, exactly exactly a doji on ES. This goes 2 up, I'll take 5 because I'm not going to be trading on this 5-minute candle for sure. Okay. Well, we might get a short on gold there out of this fair value gap in probably 10 minutes or so. I'm not taking anything on Q or ES this candle, so give me just a few minutes. Going to try to calm down the baby. BRB. Alrighty. Still stuck in this fair value gap, I see. We did break the orb on the 15 on ES. It's really the only saving grace there for ES. Gold looks like a nice short. Gonna be waiting for the next 15. Here closing in 1 minute. And then I might take this 2-2 ref short. I wouldn't even say this is an options day. Just kind of flat on Microsoft. Let me look at what paper's done. Yeah, he's only opened up. Well, he's opened up other thing. Yeah, coin. Oh wait, that's yesterday. Nothing today. Nada. Makes sense. Take a peek over here. All right. While we're waiting for something to happen elsewhere, let's go ahead and go through credit spreads. So this was, I was debating how to do this. You know, this isn't going to be super graphically appeasing or appealing, but this is going to be a down and dirty what they are, how to use them, and how I use them in my swing trading. So we have one side, which is debit spreads, and there's obviously more ways to do options. Options are awesome, as long as you know how to use them. So actually, let me make this a little cleaner. We'll do a vertical line. And then a horizontal line. There, good enough. So, debit spreads versus credit spreads. If you've seen me trade my swings, you know that I've used both. I rarely use credit spreads. We'll get into it here in a little bit. So, debit spreads, you are buying the closer in the money. Closer ITM is in the money. You are selling further out of the money. So what that means is if a stock is 400 bucks, let's go with a real example here. AMD's 150 bucks. Let's go with that. AMD is at 150. And if I want to get in a call, let me load up my options chain here. if I want to get into a call, here, let me actually go here first. Main purpose, get closer in the money strike for cheaper. Make that bold. Credit spreads are the exact opposite. So I'm selling the closer in the money. I am buying the further out of the money. Main purpose is to collect premium. Capitalize on IV, which is implied volatility. Capitalize on theta. Those are the main ones. Downside requires, and we'll get into this, requires full collateral. Ooh. Spell check. Collat, A-T-E-R. Do this because I'm probably going to screenshot this later. Okay, so debit spread versus credit spread. So obviously you're selling, you're collecting a premium when you're doing any credit. When you're getting credited, you're collecting a premium. So you are selling it outright. Think of, for very simplistic terms, you're selling the option, right? Or you're selling the option to buy the underlying at a certain price. And so because you're selling, you are negative, net negative on the position. You are -1. So to close your position, you're going to have to buy it back. For almost every other case, I guess the easier way to term it is just going short in futures. You have to buy back to close your position. And it's the same thing with credit spreads. You have to buy your credit spread back. So the number one rule with spreads is they have to be liquid on both strikes. So, where's my T here? Rules with spreads. Has to be liquid on both, or I should say all strikes. Because you have to get in and out on two legs being strikes. So you're not only, when you're buying an option and you're selling an option, you're doing that to theoretically one party, right? But when you're buying and selling, you're doing that to two different people. You're the middleman. You're selling the option to this guy and you're buying it from this guy. And so the strikes have to be liquid. And so when I'm looking through a debit spread, I want to see that it has volume. And depending on how big size or how little size, that volume might change. If you're only buying one contract, then you might not care if it has more than 50 volume. But if you're buying 50 contracts, you might want to have more than 50 volume on the contract. So debit spreads, think of them like just buying cheaper regular options. You're buying closer in the money. So I'm going to give you a real example here. We're going to go to AMD December 20th. And we're going to say that I want to get into the 170 calls. AMD's at $150 right now. So I can do a 170 call and I'm going to be buying it. And then I can sell. Let's say I want to sell 10 strikes away, or I guess 2 strikes away, $10 away. So I can sell the 180 call. The 170 call is 7.95 right now. The 180 call, obviously this is not including spread. The 180 call is 525. So my debit spread is the difference between the two. Okay. And so quick math, that's 2.75. Now, if I go on the options chain and I look for a strike that is a 2.7 cost, I could also buy the 195 call. That's at that's at 2.67. So what's the benefit, right? Well, number one, price is going to move more linearly with the debit spread than me just buying a really far out of the money spread. Number two, this is going to get, where's my little thing here? These are going to be in the money quicker. I don't know why I did that when I have a whole arrow. So those are going to be in the money quicker. This is going to take forever to get in the money. Maybe not even ever get into the money. And also for those who know options, you know that delta also is close to saying this has X percentage of being in the money. So the delta on the 195 calls is 17. So, Wall Street thinks that AMD has a 17% chance of getting in the money at 195. The 170 puts have a 0.39. Okay. So delta here, delta 170s are 0.39. The 195s were at, what I say, 17. So look at that delta change. So for every dollar that AMD goes up, your contract's only going to gain 17 cents here, and you're going to gain 39 cents on the 170 calls. Now, when we're doing a debit spread, we're also selling the 525 or the 180 calls for $5.25. So every time that price goes up, the 180s are also going to gain value, and because we sold them, we are losing money on that leg, which is the downside. You're capped on your upside. So your upside is on a debit spread is capped at the difference between your strikes times 100. So your AMD, this spread that we're doing here, the 170, 180 call, $10 obviously difference times 100, $1,000. My max profit's $1,000. My debit's only 275. So, that's 300%. And the biggest thing you'll see is you're also going to get protected from your downside because you're selling the 180 call. So if price does go down, you're going to be collecting premium on your short leg. And so if AMD does consolidate or just goes sideways, instead of you just losing money on your leg that you are long, your 170 call, you're also collecting premium on your short leg. And so that's the biggest benefit of a debit spread. Number one is you're getting closer in the money strike for cheaper. And then number two is you're protecting your downside to an extent. I haven't done it in a long time, but when I used to use Thinkorswim's on-demand function, which is how you backtest options, if you did a straight, it's called a naked option, then you're versus a debit spread, and then you go into drawdown, the debit spread usually will have about 10 to 20% less drawdown compared to the spread that didn't have any hedging on it. Right. So that's debit spreads. You're buying closer in the money. You're selling further out of the money. You're collecting premium on the short leg, protecting your downside while also capping your upside. But the trade-off is well worth it because you're able to get a contract that is $25 or whatever strikes $25 closer in the money for the same price versus you just buying the 195 call. Your collateral here is just your debit. You only have to put up the money of your debit, which is important over here on the credit spread side. So the credit spread side is your negative, your net negative. So you want to be on the other side of the leg, right? So I would be looking at the put side of AMD, because if I am short puts, I am long calls. You got to get that, know that cold. If you're short puts, you got to be you're long calls. You are trying to sell the put premiums. And so on AMD, if it's at 155. So let me change this. Say 55. So AMD is at 155. Let's say I want to get the 150 put. I'm going to sell the 150 put at 9.8. And I'm going to buy the 140 put in the world. Going to buy the 140 put at 6. So my premium collected, or let's call it credit, is 3.8. Collateral is 10. So essentially I'm tied up collateral of 6.2 times 100. So $620. So as you can tell already, the main difference, obviously collecting premium, capitalizing IV, capitalize on theta. Main difference is for the same strike difference of $10, you're tying up a ton more collateral with a credit spread. Now this is good if you're capitalizing on IV. If there is a lot of implied volatility, think of coin, think of Tesla, think of back when GameStop was going, GameStop, you want to be the seller of premium because of that IV crush. That's when you use credit spreads. And again, your credit is 3.8. Your collateral is the difference between the strikes minus your credit. So here it's $620, and you're going to be buying this back. So hopefully you're buying it back at $0 or 1 cent versus a debit spread. You're going to be capped at whatever the difference is minus your debit, or sorry, whatever the difference is, because you're going to be buying the 170 call. And so when that's in the money, it's going to be moving at a 1 delta. And then you're selling the 180 call. And so when that's in the money, it's going to be moving at a 1 delta. So if it goes any further, you're going to be gaining $1, losing $1. It's going to be a net neutral trade. So here your capped potential's at $10. And then here your cap profit would be credit, whatever your credit is. Let's make this a little cleaner because I'm going to screenshot this. Okay. Someone said NQ's dying now. Edison, this is not NQ dying. NQ's moved 25 cents from its fair value gap here. Dying would be a new low of day, and we are 80 points away from that. Now, gold is dying, but I did some EDU instead, which is good. All right. Any questions for debit or credit spreads? Yep. Yeah, no problem. It's on YouTube. If if the number one rule is able to be uh, adhered to right here, then yes, I would love to do spreads. I would love to do spreads on every single trade if I could, but it's not always liquid enough. And if it's not liquid enough, it means I might get stuck with one leg that I don't want to be stuck with. So, like, if I were trading like John Deere, I'm probably not able to get a spread out versus like AMD. I'm probably going to, like, yesterday, I got a meta spread because Meta's very thickly traded. If I'm trading like LMT, I'm probably not getting a debit spread out of that. Correct. Yeah, just straight. What's that? No, I don't sell. No, and selling would be you're going on this side of it again. You're trying to collect premium, capitalize on IV, capitalize on theta. A lot of people who sell options are doing so in usually in a defensive manner, or they're selling zero DTEs to capitalize on the IV and theta. Um, it's not very frequent that people are selling options when they have a clear trend in mind, which is the kind of trader that I am, and what I teach is, find the trend, catch it, and ride it. Um, a lot of option sellers don't do that part of it. They mainly either they have a trend in mind, but they aren't really trying to snipe the trend. Snipe's not really the right term, but they're not really trying to get the trend. They're mostly just trying to collect premium from people who are wrong about the trend. I do, yeah, just because of the collateral. Um, the main time I'll use credit spreads, other than if it's a very volatile stock, I'll do credit spreads, no problem. But if it's not very volatile, or if it's not close enough for me to really capitalize on theta, then it doesn't really make sense for me to try to run a credit spread and use 2 to 3 times the collateral. Um, sometimes I'll do it, but I don't think I've done a credit spread all year. Mostly I just haven't found a good candidate for it, but um, I also I also don't swing trade a ton on volatile stocks. It's mostly like high IV stocks. So that would be the main reason, I think. Hmm. Yeah. Right. Sure. Yes, sir. Yeah, and as always, if you ever need anything, always here for you. I'll find us. Sure. Right. Yeah. Smart. Yeah, not that my way is the smartest way to trade. It's just smart to find one way and stick to it. There's people who trade profitably on EMAs. There's people who trade ICT, and I know a ton of profitable traders who trade strat. That the smart part's not the strategy. It's just finding one and finding out how to make it work for you into a way that makes sense in your brain, so that when it's time to execute, you know why it works. Yeah, I've looked into wheel a little bit, but I haven't done the wheel. I know that the wheel requires you to have like a specific cheap stock, and usually I think you're buying 100 shares and selling premium against your 100 shares and all that. I just haven't looked into it that much, to be honest. It doesn't seem super lucrative from what I've seen. Kind of, yeah. Mm-hmm. No, you're good, dude. Right. Mm-hmm. Right. Right. Yeah. Well, let's do that tomorrow. First thing tomorrow. Alrighty. Yeah, we'll go through the scanner that we have in here, um, and then look through those and yeah, that'll be good. I'll try to be as close to 9:30 to 9:45 as possible. I try to put my son down as close as I can so that his nap runs all through this period. So really just depends on when he can give in to the sleep. He finally gave in. Gotcha. Sounds awesome. Yeah, tomorrow we'll have some news too, so hopefully some volatility. No futures trades for me today though. Yeah, that was crazy. That was my first 10-hour trade in months. Yeah. Yeah, but that's the best thing you could have done there is sat and watched though. Cuz you the other option is you would have just came in and tried to catch it and found the bottoms every time and lost a ton of money.
that's an old guy.
Yeah.
That ain't been done.
Yeah.
Oh yeah, I'm okay missing a few trades. Today I had a couple of good ones. I was gonna tell you on ES we had on the 12 hour we had
Oh,
a two that went three. This is why I
yeah.
ended up going the other way. I ended up going long on it.
Yeah.
You were looking the other way. I just happened to look at the 12 hour, and then I caught something there, and I caught something on YM. I mean, it's definitely nothing like yesterday what you got, but
Yeah.
yeah,
Well, you can for sure make you could have made money and you did going long. Um
going long.
it's just a matter of it, how often you want to go against the trend, because the trend right now is short.
Well, if you go to the 1 hour, I seen let me see where it was. It was a fan. What was that? That was a two down, two up on the
Yeah.
1 hour.
Right.
So once it broke there, and I got an actionable signal. Well, it should say some. I found some entries through because I don't think these are actual signals, but anyway, I caught something on the 15. I'll tell you what, the 15, the 30, and the 5 gave me signals,
Yeah.
and I just took it. I knew I wouldn't be able to take it more than maybe about 50 pips or 40 pips based
Right.
on the next target. And
Yeah.
I just was able to take it as it went. And then I seen it was two going three. We already passed the 50% on the 12 hour. So I just took it up. I knew it was gonna go back down, but I figured I'd at least get it to the next target there.
Yeah.
Okay, that line. So I was able to grab that for a little bit.
Yeah, and if it ended up breaking through and holding over that 73 that I marked out earlier, you could have had a pretty good risk to reward.
Yeah, ended up getting one. And my entry's always on, mostly on the 5 minute, I should say.
Yeah.
But the moment it turns on me and it starts coming back on me on the phone, I'm out of there, man.
Right.
Out. Yeah.
Yeah, we got a failed two down on the hour.
Because you know what you got to do. You know when it turns. You know. I mean, it doesn't mean it's always going to happen, but for the most part, the majority of the time, you get full time continuity. Continuity if you get multiple time frames. Turning.
Yep.
Uh, you can have some fun with it.
Yep.
So, uh,
Absolutely.
anyway, I'm done again. I know it's cool to talk here, but I feel
I don't know why you feel like you can't. You're more than welcome to talk, man.
and I'm over here taking my time, but yeah, I enjoy it. I think one of the things I'm trying to figure out is how to incorporate some of the levels I used to use, like maybe just. I mean, I understand how price moves, like I understand broadening formations, I understand all that, but I
Uh-huh.
do see some of the levels that I would have had marked previous, before I learned the strat. I
Hmm.
don't see them. I use the fair value gaps. I don't use all of them. I use the one in your indicator that I think is it's not the main one. It's one that doesn't give you all of them. I can't remember which one it is. Matter of fact, let me see.
Is it the
Open up
breaker structure?
break. I think it's a break of structure one.
Yeah, that's the most important one.
Right. So I don't add the other one because I think it's too much noise for me.
Hmm.
My personal preference.
Yep.
And but I'm telling you, some of my zones, I still love structure.
Yeah.
I mean, I see people trade. Some people trade. They don't even look past the first, 5 candles maybe. Then they can just trade the strat. I don't know how they do it, but I'm looking for structure down, structure up, break, change of structure, break and strong. Those things are still important to me.
Hmm.
I'm trying to overtake what I've learned in the strat because in the end, it's really those last few candles.
Right. Yeah. Yeah. Context is always important. I think that the biggest thing with strat, you can trade pure strat, but you can also, like my version of the strat is kind of jumbled in with, strat doesn't have Bollinger Bands or anything, and I don't really use Bollinger Bands a ton, but my point is that you can make strat your own, but as it's fine until you start trading differently than the strat, because like you can't just start taking trades willy nilly that aren't with the strat just because different systems told you to. You got to still have that foundational strategy that, makes you profitable. And strat, I tell people all the time, the strat made me a profitable trader, hands down. So,
And even in my back testing, because with trading view now, you can pull up your four, if you want to use three or four different time frames on the same,
oh, really? I didn't know that.
yeah, and literally watch them all at the same time. That thing is just transformed. Because I try to do, I mean, I've done about 50 back testing since I've seen that feature.
Yeah.
And that way you're not just looking at one time frame and clicking, clicking, clicking. You can literally line them all up and it all plays, all of them. And you can watch. It's so crazy.
Interesting.
Yeah. So if all
Oh,
trades were that,
yeah. You can hit all charts. Sweet.
see that? That
Yeah.
right there will make you a professional in the strat.
That's sweet. I didn't, this must be pretty new because,
No, I just seen it about 3 weeks ago.
yeah, I have not seen this single chart versus all charts. That's a game changer for a lot of people, myself included.
Especially back testing, because you're watching it happen and you're watching how the 5 minute flip the 15, which flip the. I mean, you can see it, and it's like you're clicking through. Literally on one screen, you're watching it all happen. I didn't even know it happened that way. There's certain things, certain breakthroughs I had with that over those 50 or 40 something trades that, and honestly, it taught me how to get to break even a lot faster.
Yeah.
Out of trades a lot faster. Um, because in the strat they want you, the candle before your entry. That's what the bottom of it. You put your stop, and sometimes you know you can kind of tell that this thing is not. You're out of time frame continuity. You can try to hold it.
Right.
Most times your instincts are right, and I used to let trades. I have to put a little poster, a little sticky note on the bottom of my monitor to say if it goes once it goes green, and I don't mean just one tick. Like once it goes in force, I'm not looking to have this thing go back out.
Right.
I'd rather just get into another trade. I used to let it happen because I'm thinking I set the stop, but just going through it and playing through it and watching it happen, you know, um, it just really helped. The one thing I will say is I need to get into swings. I like to have something working for me while I'm taking these day trades so that it
Yeah.
can help me um, the missing fear, the FOMO they call it.
Yeah.
Because if you got something else working,
Right. You won't be forced into other things.
thank you. And so that's why I'm pushing it. I could have just waited till like next year or something and start getting into options, but I
Yeah.
think it's a good hedge, especially seeing that the win rate can be a lot higher. It's a lot less noise,
Mm-hmm.
but strategies are right, especially if you can find some things with the spreads and stuff. I mean, you can have some things working. I think.
Yeah.
But anyway,
Well, I will. What the only caveat I'll say with higher win rate, and this goes for every trading strategy in the whole world. The higher the win rate, the lower the risk to reward. There's no world where you'll have a high risk to reward, high win rate trading strategy. If you do, you're not trading with the little guys. Um, and I don't think that thing exists anyway.
oh, that last part again. Higher risk to reward, higher win. You're not gonna have that. I mean, say that one more time.
So let's say that we enter a trade NQ short 10-point stop,
Right.
and I only take my profit at 20 points and you take your profit at 2 points. Who's going to win more? Probably you, right? And you're probably going to have a 98% win rate with a 0.2R risk to reward. I might have a 50% win rate, but I have a 2 risk to reward, and so we're both profitable. Your win rate's way higher, way flashier, probably to more appealing to more people. But my win rate and how I do things is just as profitable. And so what my point is, when you do go to options, my risk reward on options ends up being around the same, but I take profit sooner. So my profit is usually around 10 to 20% is when I'll take first trim. But my losers are probably right around 20 to 40%. And so I'm taking profit at about half R, and a lot of people do who have higher win rates. And so it doesn't matter what trading strategy you trade or anything. Your risk to reward correlates directly with your win rate, and your win rate correlates to your risk to reward. If you have a high win rate, your risk to reward is going to be lower, or at least your very first trim to where you catch where your trade catches and counts as a win is going to be lower than somebody whose win rate is higher. Or sorry, backwards. If you have a win rate super high, you probably take winners quicker than somebody who has a lower win rate and a higher risk to reward. So that's all I'll say. You will have a higher win rate, but you'll also trim quicker. So you got to keep that risk to reward in check on the back end on the P&L.
I told you the other day that I did the strat boot camp with Alex and Sarah Strat and all of them.
Yeah, how'd that go?
Oh, it was amazing, to be
Yeah,
honest with you. I mean, it was brutal because there are a lot of facets of the strat that a lot of people don't. Most people that do it, you take the foundational things, but with them, they go through the whole thing. I mean, it was like every evening for 4 weeks,
yeah,
and it was. I'm not gonna lie. I thought I had a grasp on it, but no, sir. I mean, it was heavy.
yeah,
But one of the things that when we started getting into the entries and exits and stops and stuff like that, you know, Alex, he showed his account, and his account. I mean, he tons of losers,
yeah,
and he did it on purpose too. We were all like, huh? Everybody in the chat was like, whoa, I mean, he's got a ton of them, but they're trimmed so quickly,
yeah,
and you can't tell it that quickly. Especially back then, I had no idea what I was looking at because he was trading options, and I don't even know if I got a video from you at that point,
mm-hmm.
but he was trying to show us, because like some of his stops are just literally the spread.
Yeah,
It's it's he in his mind, he's trying to help us understand that we're looking for runners.
right,
The strat allows you to stay in runners.
right,
That's what it allows. It allows you to cut quickly and stay in runners. Like they don't like going past, especially on a higher time frame, 50% of the candle.
right,
Not always. And most of it is because they feel that obviously I think Sarah she came up with the 50% rule, I
mm-hmm.
believe, where if it does that, it's like because twos become threes, one become two, two become three, and so it doesn't make sense to keep something like that instead of looking for another way to re-enter. He's like, we're on the higher time frames,
Yeah,
you know, we're trading dailies and weeklies and stuff like that, and we're looking for entries on the 1 hour and the 30 minutes sometimes, depending on if we had to get out and look for a new entry. So he's like, why spend all this money holding a stop, hoping that it happens? Especially when the strat, he's saying basically that the strat is supposed to move aggressively. Once you get in, it's supposed to move.
right,
If it doesn't move and it starts playing with you, you get out and you wait. You know something is not right. And so that's something I took from him, and it's helped me because I know what it feels like to hold stuff, especially you have this gut feeling like, why is it there's no volume here? What's happening?
yeah,
And so we went into the gappers, which I'm not gonna lie, I really love them. Um, so some of these concepts seem so simple that it's not. It doesn't seem real. The kicking pattern. So I don't know if you heard of this kicking pattern.
mm-mm. Nope,
These are all these things that they pull out of the Rob Smith archive, and these are they're so cool, man. I mean,
yeah,
these stocks happen almost every day. They take me to a website, and I can pick out all the gappers before the market even opens.
mm.
And then once the second candle breaks, you already know you're two up, two down. It doesn't matter where you are.
Right.
Experience. And so you just take it, you put it there. You have a small. He says just put the stop in the spread, and it should move. And then you just watch the strat. You wait for a reversal signal against you, and you get out. And so anyway, it, it was I wasn't gonna do it because I thought obviously it wasn't even that expensive, but I thought that I kind of had to pass on it, but I'm happy I did. Opened up my mind to a lot of things. The only thing I think now is stupid options. Crap is trading options in comparison to just pressing buy or sell, market limit or whatever you're doing. It's like a whole nother world, man. Ridiculous, to be honest with you.
Yeah.
But I'm excited to learn it. Anyway, I feel like I'm rambling.
You're good, man. Billy, I'm responding to you. I'm enjoying credit spreads, but it uses a lot of capital. Maybe I should try more debit spreads. Is that the thinking? So yeah, credit spreads require more capital or collateral because of the option selling aspect of it, right? Because you're selling the closer in the money spread or the closer in the money strike. And so because of that, they require more capital because you need your max loss is I guess I should have put that in the graphic, but your max loss is the difference between your credit and the collateral versus the debit spreads, your max loss is your debit. So on a credit spread, let's say you on that example, you had like a $380 credit. Your max profit's $380, but your max loss is $620. So that's the reason why they require more collateral. But in terms of which to use, we went over that in the graphic. It depends on IV. It depends on how much time is left on it. And ultimately, theoretically, they are the same, going short puts and going long calls is the same bias. So it's really up to you which side you want to go with. Alrighty. Hopefully that lesson helped. That is it for me today. No trades on options or futures. I was here all morning. We went over some good educational stuff. I'm looking at Dell swings. Yeah, other than that, nothing really for me to do. So I'm going to end it here. Alrighty. I love y'all. I'll see you here tomorrow. Powell will go over that. Well, everybody will look at swings tomorrow morning, first thing. Go through what I'm looking for, and then a little more in detail about what qualifies or disqualifies a trade. And then if I'm interested and go to the strikes, then I'll screenshot the strikes or just tell you guys what I'm looking at on there and why or why not I'm getting in something. So, alrighty. I love y'all. I'll see you here tomorrow. You're very welcome, Ryan. See you guys.